Want to know how to spot high probability trading sessions with the DR basics? All trades in today's video reveal how reading the opening price of each DR session gives you a massive advantage for high probability trades, long before most traders even realize what's happening. Let's stack probabilities together. In front of you, the overnight session has just opened with this 5-minute candle. And like in my previous video, let's start with the most important question. What does the opening price tell us? There's a visible gap between the aftermarket DR session and the opening of the overnight session. Since the ODR opened below the aftermarket, we can already exclude a DR upside model. That leaves us with a downside model intact and a possible range expansion model, though the box hasn't fully formed yet. Another detail, small but powerful, the opening candle created a volume imbalance to the downside. That's a sign of weakness right at the start. 20 minutes into the session, the DR box still hasn't fully formed, but look what's happening. The overnight DR is already bigger than the aftermarket DR box. That confirms a range expansion model. At 4 a.m., the box finally closes red. The closing price is lower than the opening price. That alone gives you about a 70% probability to see a short confirmation follow through. And that's exactly what happens. With that, you now have multiple potential targets for the session. The one standard deviation level, which is your base range expansion target, and the aftermarket lows, the natural DR downside continuation target. Let's zoom out for a moment. Do you see any other confluences for lower targets? The previous day's price action left one open magnetic volume imbalance from the RDR session and two more lower down. All of them act as magnets for price, confluences you can trail into, but remember, they don't need to be filled immediately. Don't get too greedy. Back inside the current session, there are two open magnetic volume imbalances inside the range, both waiting to be rebalanced sometime in the future. If you overlay previous DR levels, something easily done with the scripts inside my M7 DR Academy, you'll notice two of them align perfectly with the current range. Another layer of confluence that can be added manually as well. Fast forward late into the session. Would you feel comfortable taking a trade here based on everything we've covered? If your answer is yes, that's exactly right. Multiple rejections happened inside the retirement setup area, giving you time to plan and execute. One mega confluence stands out. After the short confirmation, no new low has been made yet. When you see that, there's a very high probability for that low to be taken during the session. With a stop above the defining range and targets toward the lower open magnetic volume imbalance, this setup offers nearly 4R potential. And price does its job. It reaches all marked targets, even tagging the lowest open imbalance before the session ends. Later that day, the structure holds perfectly and a clean DR downside model unfolds. With the right knowledge and tools, this could have been capitalized on early, long before the average trader saw it coming. Now let's move to the second trade. The overnight session has just opened again with its 5-minute candle. So what does the opening price tell us this time? There's something happening between each DR session, what I call the transition time window. I cover that in depth inside my academy, but let's stay focused on the DR basics here. The overnight DR opens inside the aftermarket session, meaning all three models, upside, downside, and range expansion, are technically possible. Just like in the previous trade, the opening candle leaves a volume imbalance, but this time to the upside. That signals strength. It's also recommended to highlight the aftermarket mid, because that level can often decide whether the upside structure holds, like in this example. And immediately after, the next 5-minute candle breaches the aftermarket high. What does that tell you? The upside model remains intact, the downside model is off the table, and the probability of a range expansion model rises. Price pushes higher, leaving another volume imbalance. That's momentum. The one thing you don't want to see now is the aftermarket mid breached, because that would reduce upside probability and likely turn the day into trumpet-shaped price action. Instead, at 3:40 a.m., price continues higher. What's the next information you get now? That confirms a range expansion model. The overnight session is already expanding beyond the aftermarket size. At 4 a.m., the DR box forms and closes green. The closing price is higher than the opening price. That gives you a 70% probability of seeing a long confirmation, and that's exactly what follows. From this point, you know strength is building. And since the range expansion model is intact, your base target is again one standard deviation, with everything above being a bonus. Zooming out, you can highlight previous DR levels that align with this session. More structure, more confluence. Inside the range, we have two open magnetic volume imbalances, one near the top of the range and another at the IDR low and opening price. That's your preparation complete, which can be done even before confirmation occurs. All that's left is to wait for price to show its hand. 20 minutes after confirmation, the first opportunity presents itself. Price fills an open imbalance and shows strength, offering a clean 4-hour trade setup. This one, however, stops out. Price retraces close to the range mid, pushes back higher and disregards the mid entirely. Two strong bearish candles follow, and that's where many traders lose focus, forgetting the probabilities are still in their favor. Moments later, price once again fails to close below the opening price and IDR low. That's the retirement setup you dream of. This trade offers 7.5 R potential, and it's a must-take backed by every single confluence we've discussed. Price retests the same area, rejects a previous DR level, and then aggressively pushes higher, reaching the 1 SD target and beyond. Another great example of why it's important to highlight previous DR levels. By the session's end, strength is undeniable. Even the regular DR session later that day respected the same upside logic, never breaching the previous session's mid. This is what clean, structured DR price action looks like. Both of these examples highlight one of the most important, yet often overlooked parts of trading the DR strategy: analyzing the opening price and location of each tradable DR session. That single detail often reveals great opportunities early on, from the likely model to the structure to your confluences hours before the actual confirmation candle forms. That's the absolute beauty of the DR strategy. It's logical, structured, and rooted in probability, not emotion. And the best part? Everything you've seen today comes from the DR basics I share here for free. Your only job is to study the videos and backtest it on your own. Until then, trade smart, stay disciplined, and as always, have a great trading week, and I'll see you in the next video.
We're gonna take on the world.